Here with Michael. Nice to meet you, Michael. Met you the other day. What we like to do is kind of feature a lot of up-and-coming traders. Got to know you yesterday, learning your trading style. I know you had a good day yesterday. We'd kind of like to know a little bit of your background, what you're trading, what brought you here. We're here in Miami at the Market Mastery. What got you started in trading? What are you doing? What brought you to it, etc.
So my name is Michael. Some of you may know me as Huddy in the chat. I'm 23 years old, from San Francisco, currently studying finance and economics at the University of San Francisco. I've been trading for about 2.5, going on 3 years right now. Right. And it's been just a crazy process.
Now, how'd you, I always like to know the origin story. Read a lot of comic books when I was young. So what got you started? What brought you to the markets?
Good question. So I was sitting in my sophomore year of college, and my friend had just invited me to an app called Robinhood. He said it was in the beta version, and he said, look, you could trade stocks, it's commission free, and you just do it. So that day he invited me, I threw in 20 bucks. I was bored in class, so I Googled, penny stocks. I only had 20 bucks in my account, so what can I buy? I said, what are the top, finance people investing in? Where is, Berkshire Hathaway? Where are they? And so I diversified $20 into 6 different stocks.
Oh, really? That's awesome. And how like penny stocks or what?
However I had a $20 account and I filled $20 with 6 different stocks. So very small positions.
Sure.
And at the end of the day, I made 4 cents.
Okay.
And I was pissed off. I thought to myself, how am I ever going to make money?
And you had way higher expectations.
Way higher.
Yeah.
So then I started saying, okay, what are realistic expectations? I started Googling and I say, what do the best hedge funds make in a year? 20 to 30% if they're on top of their game. And I said, okay, 20 to 30% on $20 is $6. That's ridiculous. If I pick the best stock, I'm going to make $6. And I didn't like that.
Right.
So then I started looking through the percent gainers for the day, and I started seeing some stocks that were up 30, 50%. And then I saw a stock called VLTC, which was Carl Icahn. He invested in it, took a 52% share stake. Stock went from 50 cents to 20 something.
Yep, that's back. We're back a couple years ago when we called them the billionaire plays were hot, and VLTC was one of them. Yep.
And that really sparked my interest because I was seeing on Twitter and stock twits that people were long at $2, and they knew to be long, and they were selling at 20 and making 1,000% gains. Mm-hmm. And I'm the kind of person that thinks if someone else can do it, there's no reason that I can't do it.
Sure. That's always one of the things I talk about and that's why we do these podcasts it is truly accessible to anybody. Anybody can do it if you want to work hard and you want to study. But yeah, it's accessible literally to anyone. So
then, as a normal sophomore in college would do, instead of sitting through business ethics and listening to the ethical rules of business, I started Googling stuff. I started Googling, the first thing I landed on was a gap in, it was the name I forget, but stock gaps up and it breaks pre-market highs and you buy it.
Like a gap and go or something.
Gap and go, yeah, something like that. And I started with that strategy and realized that wasn't really refined. And in life, I've always been taught to find mentors, find someone who's made the mistakes that can teach you to not make those mistakes because you can learn from them. And somehow I ended up on Tim Sykes' challenge website.
Sure, probably from Googling penny stocks or something like that. Yep.
And so I applied and I wrote this whole cover letter about the kind of person I was, and I got accepted. And so that started my career. I think it was 2015.
And then had you had obviously you're a finance major, but had you had any interest in stocks, or was it more just your buddy getting your Robinhood? So
I was an entrepreneurship major before this year of sophomore year. I was an entrepreneurship major.
Okay.
I got invited to Robinhood. I found Tim Sykes and I started studying the market for 6 months before ever putting any money in.
Nice.
And by the time that 6 months had completed, I thought to myself, okay, I'm learning something that's not necessarily what they're going to teach me in school. I'm learning the logistics and technicalities of how the markets works and how the buyers and sellers influence each other, supply and demand psychology. School is going to teach me something like the Gordon growth model, the fundamentals, how to arrive at a sound company, whether it's undervalued, whether it's overvalued. And so I figured I'm going to change my major to finance and economics so that I can understand the macro conditions, the fundamental conditions, and then learn the logistics of the market through Tim Sykes and yourself and the other mentors.
Right. And that's a great way to approach it because, I talk about fundamentals every day, but ultimately these stocks we say we don't care, but we do care. You know, we care. We know that many of them will fail. We know that they're all sketchy stocks, but there's a scale, you know, on these, you know, whether it is a hot stock in a marijuana sector that we've been trading the last few days or blockchain or something like that. Ultimately, we know the fundamentals are no good in any of these, but if it's the right place at the right time and you have that market education that a guy like Sykes will teach you, you'll never learn that in a school anywhere.
Right.
They might talk about irrational exuberance, but they don't talk about, you know, everybody. When you're looking at level 2 and you see everybody wanting in this stock, and you're looking at Twitter and everybody wants in, they'll never talk about that. You'll never learn that. So
half the professors don't even understand that in the first place. You know, they're taught different.
they'll call charts and technical analysis, mumbo jumbo. But
And I was actually reading in my textbook this last semester. I was taking financial statement analysis, and there was the strong market hypothesis theory, the middle, and then the weak. And the weak theory said that technical analysis is not accurate. You cannot use it in a textbook. And I was thinking to myself, holy crap, like you might be right, but you know, how carefully did you test that? Did you test that for lower float stocks and take out all the hyper frequency hedge fund trading, fundamentally traded around stocks? Just go into the thinly, you know, low float stocks, and I think technical analysis makes a huge difference. And so it's interesting that the textbook teaches that it doesn't, but once you focus in on your niche, well, it does.
Right. And they're looking at, you know, in my opinion, they're looking at stuff that doesn't apply to, you know, one of the reasons you came to a $20 Robinhood account and came to these low price stocks is, I mean, these are, you know, people that are looking to, unfortunately, get rich quick. So there is a lot of psychology going on here that you're never going to talk about in a class, in a college setting, because they don't think about that mania. They're thinking about wanting to find the next Microsoft and hold it for 4 years or something like that. We don't do that.
And a lot of beginner traders do that.
Yes.
You know, they find a penny stock and they're like, oh, this is the next penny stock.
Yep. And my history was, you know, I've had a lifelong interest in finance going back to elementary school, and I tried the textbook manner. You know, I tried the value investing. I read all of the Can Slim books, all the William O'Neill stuff. I subscribed to Investors Business Daily,
Right.
and I was right there with you. Well, I never had a $20 account, but I was right there with you. I'm looking at it. I'm like, I'm doing all this stuff that I'm supposed to do, and I'm making a couple percent.
Yeah.
Maybe 5%. Maybe I'm break even. And that's what brought me to find guys like Sykes. Is I'm like, there's got to be a better way, because people are getting rich in the stock market and they ain't doing it at 2% a year or 6% a year.
Right.
Or even, I mean, sure, if you have $1 billion hedge fund and you make 20%, that's $200 million. That's good money. But I don't have $1 billion account. So now you're on the journey. You must have done something to get your account above $20. Did you put more money in, or what was the next step?
The whole story. So it started out that my dad gave me $500. After I got the $20, I asked my dad for $5.
Okay.
And he said yes. And for 6 months, I didn't really touch the 500 at all.
And he knew you were going to trade with it. That was the goal.
Yeah.
Okay. All right.
And I didn't touch the 500 for the first 6 months. I every day I would wake up at 6 a.m. I would watch the stock market, and I would send a picture of a stock up 200 to 300%, at least 2 or 3 times a week. I'd send it to my dad. And I was going to say this earlier, but I just updated on my resume. As one of my key traits, opportunity seeker. I go out, I find opportunity. So every day that I saw there was an opportunity that a stock was blowing up 300%, I didn't know how to play it at the time.
Sure.
But still, Dad, look at this stock, it's up 300%. I mean, if I captured just a portion of that, I'm making great money. And so I kept sending them those for 6 months, and I still really I wasn't in the Tim Sykes thing yet, I was still just winging it.
Well, I tell you real quick, that is great. And if anyone's watching this, that is such an important lesson right there. So many people just want to go. And to take that 6 months, and even though you had a trading account now, to not trade, that puts you in a very, very small percentile.
It was tough. It was tough.
Well, especially as you're taking these pictures of these 300% runners.
Yeah,
Sure.
Yeah, it was a lot of FOMO, but it was okay. I knew there was an end goal, and I knew nothing, Rome wasn't built overnight.
Sure.
Right? It takes a while. So I had that 500. Pretty soon, I was able to con my dad into 1,000. So upped it to 1,000. And I started trade on Robinhood with $1,000. And
Where are we at roughly now?
this is 6 months in, call it 2014 summer.
Okay, all right, okay, fair enough. I just
2014 summer.
putting together a timeline. So
2014 summer, I start actually trading. I'm using the gap and go strategy without scanners because my Mac wouldn't run it, and I was just really using stock twits and very, very unprepared,
Sure.
unequipped. And I made 200, I lost 200, I made 4, I lost 4. You know how it goes.
Yep.
And that wasn't working. So I went out to find more, and that's when I actually found Tim Sykes.
Okay.
And so I found Tim Sykes. I put in all the studying. I went on a trip with my dad to Europe. And this whole 2 weeks that we were there, I was able to talk to him, tell him what I was doing for the past 6 months, tell him about my major changes, and tell him that this is something that I really want to pursue. I see a lot of opportunity here.
Now, just curious, and you don't have to share. Did your dad ever do any trading? Did he
No.
ever? No. Okay. All right.
He's a real estate guy. He doesn't own stocks. He doesn't.
Okay, so real estate. So what he understands in investment and speculation.
And big picture.
Sure. Yep.
And so after this trip in August that I was with him, and I'm a Tim Sykes student, and I've been watching the market for 6 months now, he gave me my first investment of $25K.
Okay.
I said I wanted to be over PDT.
Yep.
I told him I had no plan in losing it overnight. I had no plan in using all 25K in any one trade. I had no plan in margin. I just wanted to be able to trade.
Which is a good idea. That I would call it the Tim Grittani method.
Yeah, I told him, Dad, it's just a bank account in E-Trade.
Yep,
it might lose some money, it might grow some money, but it's not going to go to zero overnight.
And that was something I always have admired about Grittani's story is he borrowed that money from his parents, but he never used it. He only used his original capital, but he had that so that he could open up multiple accounts so he could make multiple day trades.
Right.
Yep.
So that's pretty much what I did.
Okay.
And it took from then, we can kind of fast forward, but for the next 2 years was, the learning curve.
Sure.
For 2 years, one step forward, 2 steps back.
Which is standard. Yep.
Yeah, make $1,000 a day, lose $1,500 the next day. And so for 2 years, my account stayed stable. And it was tough. Every 4 months I would call my dad. I said, Dad, I'm really getting good now. I'm really getting good. And 4 months later, I'd call him again. No, Dad, now I'm really getting good. And for 2 years, I did that. And I still call him. I go, Dad, now I'm really getting good.
Right.
And so it's just been this long process of really understanding, watching it every day and repetition, just like you're putting in 10,000 hours, like Malcolm Gladwell says, or
Sure.
You're taking your free throws, whatever it is. You got to watch, you got to get the repetitions, and it took 2 years for me to start really understanding the chart movements that were going on and focusing on certain days that made sense and not trading the days that didn't fit any patterns. And it took 2 years, is what I'm really trying to say. It took 2 years to white out the 90% of the stuff that I shouldn't be touching. Because especially for me, a young kid who is technically diagnosed with ADHD, whether you believe in that or not, I'm trying to trade everything.
Sure.
I was all over the place.
Well, that's everybody, and if you've got ADHD on top of it.
Yeah. Next thing you know, I'm in Tesla.
Yeah.
At one point, I bought Tesla at 146, like 2 years ago, and I sold it at 150. Not realizing I was in Tesla at the time, and that would have been a great long-term investment.
Oh, sure, yeah, 350 right now. Yeah.
Right, so that's the whole, I was all over the place. I sent Mark Crook all my trades. He said, Michael, you're in a bunch of large cap stocks, and that's where you're taking your biggest losses. Just look.
Sure.
Why are you trading large cap stocks? When have I taught you to trade large cap? And I was like, right, Mark, you're right. I don't know why I'm doing that. And so I stopped. I narrowed down my focus into the actual patterns that were taught in the specific day that they happen, not 3 days later where now it's at that price. No, the day that it needed to be is where I needed to start focusing. So,
and that's something I think, again, that is so often overlooked. I tell this story all the time, but it's like you can, with a smartphone and $500, you can start trading today. I mean, we could have the cameraman over there could start trading today.
I see it on the bus all the time. People are just looking at their phones.
Yeah. But no one, and the problem is, it is possible to be profitable day one, but you have to be an extreme outlier. And the biggest things that I like is that you took that 6 months and you left that $500 rotting in the account. And then once you got the capital, you still just took that long-term approach and you didn't expect to turn 25K into 500,000 in a year. You know, there are Roland Wolves, but there's very few of those. And that's why I talk about looking at charts till your eyes bleed.
Yeah.
I mean, you just got to see it. And then eventually it starts clicking and you start avoiding the Teslas and all this other stuff.
Because there's better opportunity.
Yes. Yep.
So, and to go off the Ducks and the Roland, I mean, seeing their success is just absolutely amazing.
That's-
I mean,
yeah.
they've been such a great help to me personally in the chat, just seeing their trades, understanding the chart, and going off of that. And as a trader that had been in the game for so long, and to see these newer traders doing so much better than me was at one level inspiring, but another level really the opposite. Where
Sure.
it's just like I was getting down on myself because now these guys are doing it and I'm still being left in the dust. So that was really interesting to see, but it also, like I said, was a huge help and influence because of their commentary in the chat and their video lessons. It has improved my trading.
Yeah, I always say when you look at those extreme outliers, it's anything. It could be sports, it could be business, it could be trading, but you know, use them as inspiration. Know that that's the possibility. But you're in trading, it's just you. It's only you versus you. You control your losses, you control your gains, you control what you do every day. So be inspired by those guys, but never hold yourself to some different standard because they're doing things that you're not. I mean, if you're profitable, the thing is, if you're profitable, you're in the top 5% already. If you're not in the top 0.0001%, that doesn't mean you're not a good trader. Right. That doesn't mean you're not growing. I mean, you're a young guy. I mean, you got 80 years to trade, 70 years, however long you live. I mean, you're so early in the journey to be profitable. So
it's exciting.
Yeah, it is. I tell you, I talk about on Stocks to Trade Pro a lot that I'm like, man, you know, I'm an old man. I didn't have the internet when I was your age.
Must have been so different.
Yeah, it was like, you know, I always had an interest in technology, always had an interest in trading, but in 1992, or when I was your age, 1996, I mean, I couldn't get an E-Trade account.
Right.
I couldn't get online.
Couldn't look at a chart.
Yeah, I mean, yeah, exactly. You know, if you got the Wall Street Journal, it was all just tickers and
you're
prices.
making some calls to put in some orders.
Yeah, exactly.
Had a payphone.
And where do I start? Yeah, with the payphone. Yeah, you know, I had a cell phone, but it was a bag phone.
Right.
But so I always talk is, you know, I'm jealous of. I wish I could have gotten started at 23, and especially in this market.
In this market environment, yeah.
I mean, it's like there's never been. I've been in this game for 10 years, and you know, 2007, 2008, 2010, those were good years. But 2014, 2015, 2016 is just incredible.
Yeah.
So, and if you've got those skills and you've got that discipline, then you've got a skill that you can use the rest of your life.
And you know, it's nice because over the 2 years, it's you know, thinking back, that was all preparation for, like, recently we just had the Bitcoin and the pot stocks blow up. And I have seen this happen, whether it's the shipping sector with Dries or whatever it was, AQXP, ZB, there's so many. KBIO, yeah. I remember all of them blowing up and I wasn't prepared at the time. And I missed them. And yeah, there was FOMO and yeah, maybe I lost some dollars here and there. But now, 2 years later, when they happened again and they went through their cycles, I was ready to strike.
Yeah.
And I made, so I made good profits off of it.
Yeah. Now, where are you? So now we're up to present day, you know, kind of like where are you at in your profitability? Like where is your trading at right now?
So I joined Tim Sykes, let's say August 2014. So August 2016 I joined August 2015.
Okay.
So August 2017 was my 2 year, this past August was 2 years. And that's when I started noticing a difference in my profitability. That's when it started becoming, my due diligence is not as good as it should be. I can admit that.
Sure.
But I started tracking my daily profit loss, and I started realizing that 4 out of 5 days I was profiting. And my one loss would be a little bigger than I wanted, but still, it was 4 days of good trades and then 1 day of bad trade.
Yep.
And that was different than the 1 step forward, 2 steps back. Now we're going 4 steps forward, 2 steps back.
Exactly. Yep.
And that bred some confidence. That bred, I knew what I was doing at this point. It had been so long that I could now take what was working and what I was really doing well at and focus on that. And so then, starting in August, I went through all of Tim Grattani's webinar videos. I watched every single one. Then I watched all of Trading the Tickers.
What I love, again, is you found you were consistent, you found you were growing as a trader, but yet you still went back and did more fucking homework. That's what I love. Because again, with trading. So often people are like, oh, I got it. I don't need to watch video lessons. I don't need to read books. I don't need to review my trades. I got it.
But it's repetition.
Yes.
It's the free throws. You got to keep taking the shots.
Yep.
So I started rewatching all of Tim Grattani's webinars. I bookmarked every single one, and every day when the market would close or when I was bored at night, I would watch the webinars. And then an interesting idea dawned on me. I saw so many plays starting to repeat themselves that going September, October, November, whenever I saw a certain setup, I would go match that setup, whether it was in Trading the Tickers or in one of his webinars. I would go watch him trade that exact same setup. And so that the next day when I got to the market, I would literally trade it the exact same way he did a year ago, 2 years ago, whatever it was, and it started working out. And so that was really big. So now I ended up watching Trading the Tickers, I think 5 times through.
Awesome.
It wasn't just, start on chapter 1, go to chapter 9, but it was, okay, I have a multi-day breakout right here. I'm gonna watch multi-day breakouts tonight, and then tomorrow I'm gonna be prepared. Or I have an overextended gap down, so I'm gonna watch the overextended gap down tonight and then be prepared tomorrow. And that was, it gave me a really calm head going into the market. And then I started.
Well, and it's nice, I'm sure from your perspective, to kind of close that loop, because here, it's a great DVD. I recommend it to everybody, but it's a few years old, and here you're matching it up to the 2017 market, and you're like, these guys are right,
Yeah.
Sykes is right, Grattani's right, Crook is right, Bowen's right. It's the same stuff over and now. It won't be biotechs, it might be shippers, or it might be weed, or it might be blockchain, but it's the same repeating stuff over and over again.
And so that takes us to this November, where I started really becoming consistently profitable. And then I took it to the next level, and what am I missing now? And it was stats. I don't have stats. Dux has stats. Tim Grattani has stats. I don't have stats.
Right.
And that's because of my due diligence. I'm not very organized. I'm not very good at Excel. It seemed like a challenge, which is weak thought process in my mind.
Right.
So I was like, all right, I got to start tackling this. I got to start making stats. And so far, the stats that I've created for certain days, for certain setups, have helped me guide me along my trade. That these stats help me realize whether the trade's on my side, whether it's acting the way I want it to act, or whether it's not.
Right.
And when a majority of the time they act one way, and because of my stats, and then this day that it's not acting that way, I know that the trade's not working out.
Right.
And so that's helped my confidence, and it's helped my covers at certain areas become more appropriate, because I know generally where the stock should close, what I should expect, instead of just guesstimating.
Right.
Which used to be a thing.
I think so much in something that I try and talk about on the podcast and in Stocks to Trade Pro is, a lot of trading is what you don't do. If you can avoid stuff that doesn't work for you, if you buying breakouts doesn't work for you, you avoid that. That can make a huge difference. And yeah, it's hard, because trading, you sit there at that computer for 8 hours, you want to do something, you want to press some buttons, but if you've got those stats and you're like, well, this is just nothing that works for me. Now all of a sudden you've got a flat day versus a down 500 day or a down 1,000 day, and now you're not taking that 2 steps forward, or 1 step forward, 2 step back type thing.
And so to go off that, I didn't mention this, but very important to mention. In August, right around the time that I started becoming really profitable, I decided to only short. I decided, I know my stats, I'm not good at longs.
Yep.
For whatever reason, I get scared, I don't get the right entry, support's not as easy as me to guesstimate as a top is. So I understood tops, I understood overextension, and so I said to myself, stop longing, because you suck at it, and start shorting. And what I realized in making that transition to cut out all of my longs was that sometimes where I would try to long a breakout, it would be a perfect short setup.
Yep.
And I would long it, I would lose money, and it would end up being a perfect short setup. So I realized if I take out the longs and just think only short, I'm not gonna miss that short setup, and I'm not gonna lose money on the long that didn't work.
Yep.
And since I'm more profitable with my shorts, since I'm more confident, I understand them more, I should only be shorted. Longing doesn't make sense.
Yep.
And so taking out the whole idea that I could long, like there wasn't even a thought that came in my head, long this stock. No, it was short no matter what. I wasn't gonna long, no matter what Roland did, I wasn't gonna long a stock.
Right.
I was gonna short. And that was huge. And then I realized what shorts I was better at than the other shorts, Shorting parabolics, that's a really tough move to make.
Oh yeah, yep.
But when trend reverse is around a red-green move, that's an easy one. And so I started realizing what are the layups, what are the stronger ones, what are the harder ones, what should I use size, what should I not use size. feelers are fun. We're all a little bit of an addict.
Yep,
It's an
yep.
adrenaline rush. So sometimes you're gonna throw out some feelers, but you got to know what is worthy of, placing down your bet.
Yeah, I think one of the biggest temptations is, I always call it like the hand on the stove. Everybody, new guys, they all want to short the parabolics.
Yeah.
And that works, but it's hard.
hard.
And yeah, if you can wait for that, high a day reject, the late day fade, the green to red on a stock that's been up, so many days in a row, those are the high percentage setups. Where guys get in trouble is they short that front side of that move.
Yeah.
If they tried shorting Ford today, they were in trouble.
Yep.
And then they also don't have the discipline yet. They haven't spent the 2 years to see the charts and know what these things can do.
Right.
If you've seen a Dries or you've seen a KBIO or any of these other ones, you know that if this thing ain't working, I got to get out.
Gotta get the hell out.
And that's what the new guys don't do. They haven't been through those or whether or not, I wasn't in KBIO, but I know guys that were, and so I'm like, hey, if this low float stock is pushing high day, and I'm short, this is not something I want to stay in. And
Right.
that's where the new guys get burned.
And I also think the hard thing for new guys is when you do see that parabolic, that FOMO where, regardless, and you see Tim Grattani or Ducks and they short at the top and you're just like, all right, it's possible.
Yep.
But what new guys don't really realize is that's a hard short. The next day when it shows clear trend reversal,
Yes.
that's the easy short.
Yep.
But the patience or the in the moment or the minute by minute just watching it, you lose sight of the global picture that it will have a trend reversal. It's just a matter of when and waiting for it.
Right.
And getting the top of a parabolic short is just insanely tough.
Yeah, day one, low float stocks, parabolic. You can make money shorting them, but man, it's hard.
It happens, but yeah.
And it's blown up many a new trader. So, but yeah, that's why and I say it till I'm blue in the face, but it's like, just wait till day 2, day 3. There's still plenty of money to be made on these.
And if you know your setups, you're gonna be able to hit day 2 or day 3.
Yep.
Because it'll show the setup.
So you had a good day while we're here at Market Master yesterday. What was the play? Was it a short? What was the setup?
So yesterday was actually really exciting because it was a long setup.
Oh, nice.
And
Good.
I
like
don't-
it.
So obviously, now that we're, 6 months removed from August, like I do like to try out some longs, especially in such a bullish market.
Right.
It's almost foolish not to.
Yep.
So I've been tracking all the pot stocks for the past 3 weeks, and I really have a good grasp on how they move. Tim Grattani always talks about in his webinars, you throw out a ticker, and he goes, I haven't watched it, I can't give you any advice. And whether it fits a pattern or not, he hasn't watched it, he can't give you advice.
Yeah, that's something I talk about all the time is, keeping your notes, keeping your notebooks, Evernote, writing stuff down. I always say, avoid the random stocks. If it's just a runner and you're like, I've never seen this ticker, try and avoid that. But if you've been watching this thing for multiple days, if it's XNET and you're like, this stock goes red to green every day because you've been watching it for months, that's where your edge is.
Right.
You trade random tickers that pop up, you might do okay, but it's
Someone
much...
else has the edge on you.
Exactly.
Someone's got the drop, and you're gonna get dropped.
Very well put, yeah.
And so pot N is, if I'm going to buy a breakout chart, like I said, longing is not my strategy.
Sure.
So if I am going to long a stock, it's got to be picture freaking perfect.
Mm-hmm.
It's got to be a 52-week, an all-time high. It's got to have no resistance overhead. It's got to have the volume.
Which is exactly what we talked about a little while ago. Yep.
It's got to have volatility. And so pot N showed all of that yesterday. It is extended, but it has had 2 weeks of consolidation in between 18 and 30. And it held 29, which was the breakout for the whole day yesterday. And so on dips, I was getting in as close as I could to 29. And just like they always do, once, especially with OTCs, late day, once all the volume comes back into the market and everyone notices there's a breakout happening, it goes. And so pot N went from 29 cents to 36 at the close. And I longed it, Tim Sykes longed it, and it was a great trade.
Yep. And that was what, like a $3,000 profit? Or
$3,000.
Nice, yeah.
I was also long THCT, which was a beautiful OTC.
Yep. See, I was thinking that was the one you were in, but you got out of that early.
I wasn't.
Yep, that's right, okay.
I had 5,000 shares at $1.05.
Okay.
Bought in on the dip because the breakout was at $1, went down to $1.05. It was a little illiquid, so I didn't want to take any kind of crazy size. And $1.05 to $1, it's a 5% chase from the breakout. So,
Sure.
At most, if I'm going to lose, it's going to be 5%. That's kind of big for me personally. So I got in at $1.05, and into the market close. I was kind of watching, so my plan for the day was to let pot N, to buy pot N in the breakout, let it close, and use red green the next day as my risk. I had the exact same plan for THCT. Buy the breakout and use red green the next day as my risk, because I watched all the pot stocks go in the past 3 weeks, and they'd set their first green day, and then the next day they would not break red green and fly.
Right.
So with the possibility of them not breaking red green and flying, well, I knew if it broke red green, trade was over, get out. And I knew that if it didn't close, if it closed anywhere above $1.05, I'm making profit.
Yep.
So it was a good risk-reward situation. Unfortunately, at the end of the day, I threw up another ticker on my chart, as you know, so many people have made this mistake before. I threw up ACBFF on my chart. It's a stock, I'm not watching it all throughout the whole day.
But it is a marijuana stock.
And it has been a sector leader in the past, which is why my mind tricked me into kind of watching it. And it was kind of breaking out.
Which is a good thought process. It's a sound thought process, yeah.
And I saw it starting to fail as pot N and THCT started popping off. And so I thought, okay, I'm already from $1.05. THCT at this time was at $1.20. I was thinking 10 to 15% gains right there. And pot N was from 29 cents. It was at 32. Again, I was thinking 10, 15% gains. And I saw ACBFF crashing, and so I took my gains. And that wasn't an intelligent sale, thinking back, because like I said, my plan was to let them close.
Right.
And use red green as my risk the next day.
And that's again something I talk about all the time is, you had your idea, you had your plan, and you let an outside source influence you.
ACBFF never had anything to, regardless of the strong price action some sector leader was having that day, which it only had at the end of the day. That was never the plan throughout the whole day.
Right,
These stocks were acting completely
You never
on their
mentioned
own.
ACBFF anywhere in your thought process.
And so I let this outsider of a stock just completely influence my sales, which that's not very intelligent.
Which is very common in chat rooms,
Yeah.
stock twits, Twitter, etc. You have your own idea, your idea is working, and then you're letting it grind up, and then you start reading stuff, you start looking around, you get somebody saying this is coming, that is coming, and then you let that outside source violate your plan.
The worst thing to do is go to stock twits and start reading what they're saying. And then it's just like, oh my God, there's news coming out. Wait, there's not news. Oh, there's a financing. Oh, what are they all talking about? But yeah, so I ended up selling THCT at $1.20 right before it went to $1.80 in the next 5 minutes.
So yeah, if you want to look that ticker up at THTC on
THCT.
Yep. On January 18th, went from 120 to 180 in 10 minutes or something like that. Yeah,
ridiculous.
So now how many shares did you have?
So I had 5,500 at $1.05.
Okay.
So had I at least let them ride till the close, which was the plan, red green, at $1.80, that would have been fantastic profit.
Sure.
Fantastic.
But you never want to play the coulda, woulda, shoulda game, or you learn from it.
But I do want to play the stick to my plan game.
Yes.
Because that is why that's how I would have made profit. That's a lot of traders. Sticking to the plan is the hardest part.
Mm-hmm.
Tim Grittani always says this, and I love Tim Grittani quotes. Have a plan, trust the setup.
Yep.
And that's so crucial to everything. Trust the plan, have a setup.
Mm-hmm. Because that's, and again, that's how you get better too, because once you take in outside sources, other information, you'll learn from them, but once you're in that trade, it's your trade and nothing else should influence that. You should have it all, you should have I call it like an if-then statement, like in programming. If this happens, I do this. If this happens, I do this. Yeah. This is my stop, this is my goal, avoid the noise. I've given presentations about that in trading, So that's awesome. Now, let's fast forward to today. You're still in school? Then?
Still in school.
Okay, so what's your kind of goals and what do you plan on doing in the future?
That's a good question. So I'm actually figuring that out right now. I graduate USF in May.
Okay, so you're close on graduation, all right.
Yeah, I love stock trading. And it's pretty much the only thing I really, at this age, that I really love, you know? And I'm sure that can change in the next 5-10 years, big picture. But for now, I kind of want to pursue what I've been going after for the past 2.5, 3 years. I mean, I think that's a smart move.
Sure.
I also have the degree behind it. So the question is, after I graduate, do I want to go work for a hedge fund? Do I want to make some cold calls? Do I want to continue my trading? It's a hard question. And my goals were never about a dollar amount. It was
Right.
always about being successful. I saw an opportunity to take
Learning
advantage
the
of
process,
and learn the process.
getting good at
Exactly.
something. Yeah, yep.
And so that is my real and only goal right now. And I want to take that into, well, I mean, the whole life story is I want to move to London.
Oh, okay, cool. All right.
In theory.
All right. Why London?
So I'm a kind of person where if I get set in my ways, if I get comfortable, I start deteriorating.
Okay. Yep.
If I have a bunch of good friends that I love and I have a lot of fun with and I get really used to all that, that's bad.
Okay.
I get into some poisonous habits.
Okay.
And so as I'm graduating college, I know that I need to leave those habits
Okay.
behind. I need to go meet new people. I got to expand my comfort zone.
Which again, this is the time to do it. You
Right.
know, you're young. You know, you've got no commitments.
And I can trade anywhere in the world.
You can trade anywhere in the world.
So
Sure.
it's time for me to expand my horizon, and I need to get somewhere where I'm not going to feel comfortable.
Sure.
So
That's an awesome attitude. I love
yeah.
that.
And so I'm a West Coast boy. I was born in Los Angeles, born and raised, moved to San Francisco for school. It's time to go to the East Coast.
Okay.
Or further.
Sure.
New York is an option because that's the finance sector. That'd be ideal.
Yep.
London would be a cool option because I would like to apply to some master's programs out
Well,
there.
and obviously London is another financial center of the
Yeah.
world as well. So,
So my goal is to be profitable enough in stock trading so that I could apply to somewhere like the London School of Economics and say, hey, this is what I've done, this is the kind of person I am, but I want to learn more.
awesome.
And see if a kick-ass trading portfolio with a kick-ass resume with a kick-ass GPA can get me in there. So trading is a means for me to get into masters.
Interesting.
At the end of the day, the money's money.
Okay.
Money's
Well,
money.
Yeah, exactly. But yeah, I love that you've got that planned out. I wish I was that smart when I was 23.
I thank my dad for that.
Yeah, I don't
good dad.
know if I had any goals beyond tomorrow when I was 23.
My
But
dad always tells me have a 10-year plan.
okay, awesome.
So this is part of the 10-year path. I wouldn't say it's set in stone because I'm 23. I really don't know.
Sure.
But I have a general direction, and I'm gonna pursue that.
Cool. Well, hey, I appreciate it, Mike. It was nice meeting you. It's a
Pleasure.
great story, and
Yeah.
make sure we'll connect. And man, it would be awesome. Maybe have you back in a few months, and
Yeah.
maybe when you're living in London at your hedge fund, we'll follow up with you again. So,
Thanks for taking the time.
yeah, thanks. Man.
Hey, Tim Sykes, Millionaire Mentor and Trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there. And also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.